So what's been happening is that we've seen this big gap open up between the 10-year Treasury and mortgage rates. And right now it's at 235 basis points. Before COVID, it was at 170. And since the Fed announced the unlimited buying back in March, we've seen a 30 basis point drop in that. So the full drop we could get is 65 to get back to where we were. That would be 2.3% rates. But I think we can easily get another 30 basis points over the next 3 or 4 months to take us to 2.7.
And you think that that is likely? So then people don't need to rush right now if they're thinking about doing this.
Yeah, I think if we continue the trajectory that we've seen since March, we can get to 270. 230, I think, is a bit of a longer stretch. But I do think that, you know, in this current environment, everything is uncertain, right? There's two parts to buying a house or getting a mortgage. One part, obviously, is the interest rate. That's very favorable. The other part is your income and your employment. And that's very uncertain right now. So I think if you think that you can save money right now by refinancing, or if you're thinking of buying a house, you should go ahead and do it now because lending standards are getting tight. And if you lose your job, you're going to be out of luck.
Okay, and that's amazing because you actually are basing some of this on prospects for people and with the crisis, depending on whether you're, you know, if you're laid off, if you could be a permanent layoff. I mean, you have to think about all those things if you're going to go into the borrowing market right now, I guess. Those are all factors to consider.
Yeah, absolutely. And one thing that's very concerning right now is that the improvement that we've seen in the jobs market the past couple of months has been people coming off of temporary layoffs. But if you look at permanent layoffs, those are actually going up. So what we're seeing is that the jobs crisis is migrating into more permanent jobs, and it's migrating up the income chain, so to speak, into folks who will be potential home buyers. So we've got a long way to go with this jobs crisis, even if we get this health problem solved, which doesn't look like we're going to get it solved anytime soon. Okay.
You're happy. You say that housing starts are rebounding, but you're still worried. Housing market's in a precarious position. What do you mean? Why?
Yeah, so housing starts are rebounding pretty well. The new homes market has bounced back, but existing homes market actually has not yet come back. We're still down 30% from pre-COVID and down 27% year over year. What we've seen is that there's been a big increase in mortgage applications, but some of these are what I'm calling speculative applications. So mortgage applications are up over 20% year over year. Part of this is this really attractive rate environment. A lot of people are kind of like, well, let me see if I can get approved. Also, a lot of people are shopping for homes. The first thing a realtor asks you when you call them is, have you been pre-approved before they really want to take their time to show you a house? So a lot of people are applying for mortgages. Not all these mortgages are going to turn into home sales.
So we're all trying to help out here and think solutions and everything about our, you know, so many things happening in 2020, Tendai. You did an actual study for LendingTree about black home buyers and being more likely denied mortgages. We've had conversations here that there are times where certain metrics could be softened for loans, the way things are graded on a curve. If you really want to try to, you know, the old saying, extend a hand up instead of a hand out. What's going on behind the scenes? How do we fix this? Where are we currently in the environment for trying to get a mortgage?
Yeah, so for black home buyers, their denial rate is about twice the denial rate overall. So, you know, if you're a black home buyer trying to buy a home, you're less likely to actually get approved for a mortgage. This really stems from the big gap in net income or net worth or income inequality that we have across the races in the United States. And all of that, of course, stems from, you know, hundreds of years, 400 years of racism and discrimination, which shows up in this income disparity. So really, we need to close that income gap. We need to close that net wealth gap. And probably the easiest or kind of the most direct solution for that is our reparations, which is a topic that's getting increased attention these days.